Namaste, good morning. A session where we are going to look into two of the major amendments, okay, two of the most uh, possible questionable amendments, that is slum sales and the provisions of partnership, that is 9b and a related amendment. Okay, so we are going to look into two of the major amendment. Okay, this is taxation on dissolution and reconstitution of the firm that we are going to see, and also we are going to look at slum sales today. To start the class, let us start with the slum sales, because we were doing in the yesterday's class about valuation rules. The whole purpose of doing valuation rules is to lead you to slum sales. Why amendment? What is the amendment? Let us understand both. But why should there be an amendment on slum sales? What is the next? We will understand what does the amendment signify. Okay, on the question of why there is an amendment on slum sales, okay, we all know that probably in your articles initial days you would have seen that people were telling, not only here the amendment was in some other place also. People were telling slum sales means no GST. If you are slum selling, there is no GST. So there were many slum sales transactions which were taking place. That is also arrested. Anyhow, that has no significance here in direct taxation, but generally I am telling. There are some corrections which are made. That is why it is amended. The previous law used the word sales. Okay, the new law used the word transfer, which is the most appropriate word. Okay, the amended law used the word transfer so that it covers everything. Previous law only used the word sale of a unit or undertaking without assigning values for individual assets and liabilities. Now I want to cover all type of transactions. So the new law uses the term transfer. The new law uses the term transfer. Then if this is one of the difference, the major difference is on the full value of consideration. The previous law uses the word monetary consideration. Since the law used the word monetary consideration, non-monetary considerations were not picked or were not getting taxed. What do I mean that? I slum sold an division or unit of an undertaking. The company, had a part of the undertaking or a unit of undertaking which I sold, which I transferred. In return, I got equity shares. In return, I got equity shares of the other company transferred to me. So, it was not getting taxed, that consideration, because the previous pre-amended law used the word monetary consideration. Now that is also sealed. Okay, full value of consideration is redefined. Full value of consideration is redefined. How we redefine it? That's why we study the valuation rules in the beginning, so that the redefining part becomes easier and simpler. So that is, I would call it as a more of a correction exercise which took place, uh, because of which we are coming into this taxation of slum sales. Still, the definition holds good. sale or now transfer of an undertaking without assigning values for individual assets and liabilities. The definition holds good. The mode of computation holds good. What is the mode of computation? Uh, Even pre-amended law and now also, what will be cost of acquisition is net worth of the undertaking transferred. Net worth means assets minus liabilities. Liabilities pertaining to that asset, pertaining to that unit, pertaining to that part of the undertaking. That holds good. Still, if that undertaking or unit which is transferred is 3 years or more, 36 months or more, it is a long-term capital gain, otherwise short-term capital gain. Still, the benefit of indexation is not there even if it is a long-term capital gain. Okay, here I need not see asset-wise whether it is an LTCG or STCG. As a whole, if the unit is undertaking for, if the unit or undertaking is in existence for 3 years, okay, depending upon that, we are going to tax it. So, that the reason for this amendment is correction in the law. But when they amended, they brought in lot of element into it. Okay, in our notebook, slump sales hyphen section 50B, 50 capital B. In our notebook, slump sales section 50B. Okay, transfer of a unit or part of the undertaking, transfer of a unit or part of the undertaking without assigning values for individual assets and liabilities. Without assigning values for individual assets and liabilities. Okay, so now you understand what is the significance of this word transfer. It is wide in meaning. The term transfer means, we all know, okay, compulsory acquisition is transfer, conversion is transfer. So the word transfer under 247 is an elaborately defined aspect. Okay, so not just sale. The previous law used only the word sale. Now the word is transfer of without assigning values for individual assets and liability. They are not assigning. That is, okay, my last known to you, bro, the glass division of that company sold for 100 crores. They sold a division for a total value. They did not assign values for individual assets and liabilities. They did not say how much for the factory building. They did not say how much for the various goodwill, how much for various other assets. They said, you take over this undertaking for 100 crores. So without assigning values for individual assets and liabilities. Okay. Mode of computation. The next line in our notebook, mode of computation. Mode of computation have particulars and an amount column. And the amount column just XXX we are going to write. Okay. Full value of consideration. Full value of consideration under, after that, open bracket. Okay. FMV, fair market value. FMV1 or FMV2 whichever is higher. FMV1 or FMV2, whichever is higher. Full value of consideration is nothing but FMV1, or I'll explain you what is FMV1, FMV2. As I said, that's why I first thought valuation rules. Okay. FMV1 or FMV2, whichever is higher, that becomes full value of consideration. Less cost of transfer will give us net consideration. Less cost of transfer will give us net consideration. Less cost of acquisition, that is net worth of the undertaking, transfer, unit transferred, whatever word you want. Net worth of the unit transferred. Okay. Gross long term / short term capital gain. Okay. If you ask me whether any exemption can be claimed, I doubt, because if you look at it, 54, 54B, all the are for individuals and HUF. The only thing is 54 EC. The only thing is 54 EC is the only exemption possible to claim. But there the condition is asset transferred should be land and building. Here maybe land and building is transferred, but what is transferred is unit of an undertaking. So I don't think exemptions are available. So directly we will tax whatever we are getting as gross gain. Okay. Under that note, where the undertaking or unit, or you write the word unit, that is more better word, where the unit is in existence for, where the unit is in existence for 6 months or more, then LTCG, otherwise STCG. Otherwise STCG. Okay, full stop. Next line. Even if it is a long-term capital asset, even if it is a long-term capital asset, benefit of indexation is not available. Even if it is a long-term capital asset, benefit of indexation is not available. Now there are three things that needs to be understood. Three things that needs to be understood. What is this FMV1? What is this FMV2? And what do I call by the terminology net worth? If these three things are understood, then we are getting it. Okay, we are going for the final computation. So three things needs to be understood: FMV1, FMV2, and net worth. That is the cost of acquisition. If we understand that, then the whole thing is clear. To a not only to a larger extent, net worth has remained constant. There is no amendment. As I told you, the amendment is only on full value of consideration. Previously, they used the word monetary consideration. Previously, now only they have realized it is not, because of the problem that came, that people, the transferee entity allotted equity shares to transferor entity. but the law by mistake used the word monetary consideration, so it went untaxed. Okay, so that's why the amendment was needed. Now, when they did the amendment, so if they want to correct it, what they should have done is, okay, simple, monetary consideration plus fair market value of non-monetary consideration received. They did not do that. They said, now boss, I want to make one course correction which is permanent in nature. FMV1 is fair market value of asset transferred in slum sales. FMV1 made a big difference. FMV1 was not even in the question at that time. What is received was only the question. Let me correct it once for all. FMV1 is fair market value of asset transferred in some states. So, if the unit transfers land, building, jewelry, investments, we know how to value it now. Minus the liabilities pertaining to that, only external liabilities, no question of share capital, reserves, etc. FMV2 is monetary consideration plus fair market value of non-monetary consideration received. We will arrive at the value. We will arrive at the value. Okay. So we'll arrive at the full value of consideration. So full value of consideration, FMV1 or FMV2, whichever is higher. So let's walk into, in our notebook, full value of consideration. In our notebook, full value of consideration. FMV1 hyphen fair market value, FMV1 hyphen value of assets transferred in slum sales. Transferred is the keyword, please remember. Value of assets, whatever asset I gave away. Value of asset transferred in slum sales. Okay, value of asset. So, to a larger extent, our rules stands there. To a larger extent, whatever rules we have, that stands. Stamp value in the case of immovable property. Okay, book value in the case of depreciable assets, debtors, stock, current assets. Okay, and depreciable assets, book value. Jewelry, work of art, architecture, registered valuer, they will give you the value or the fair market value on that date. Listed shares, on that day, what is the quoted value or immediate preceding date. Unlisted shares, find out the value. How to find out the value? That company's assets and liabilities, take the fair market value, reduce the liabilities, divided by total number of shares of the investee company into number of shares held by me. Okay, will give me the value of unquoted shares. Okay, so this assets minus relevant liabilities. What will not be an asset? There are two things which are not to be considered as asset. There are two things which are not considered as asset. One, you will not consider advance tax, TDS, TCS minus refund due. These things as, and you will not consider it as asset. The second thing that you will not consider it as asset is miscellaneous expenditure not written off, unamortized amounts. Okay, that will not be considered as asset, fictitious in nature. Of course, I don't think any balance sheet permits it now, but generally, okay, these two are not regarded as assets. Reduce only external liability. reduce only external liability. So all the shareholders' funds will not be reduced. In the external liability also, provision for taxation is not an external liability. It's for the profit you have earned and not for the asset you are having. That's the logic. It's the profit you have earned for which there is a provision for taxation. So when I don't take advance tax, which is there on the asset side, which will map with the provision for taxation. So I'm not taking provision for taxation. Okay. Ipo, one thing our mind, because from the student's perspective, you should not, the same thing which I am doing here, I will do for net worth also. You know, that is what is transferred. The same thing which I am doing for FMV1, I will do for net worth also, my dear friends. But the difference is, when I do for net worth, I will not take fair market value and all. Everything book value, ignoring revaluation. I'll come to and dictate it, but I don't want you to get confused. Sir, are we doing the same thing? We will do the same assets and liabilities, but the values will be different. Okay. So FMB1 is assets transferred. Go to this one. So FMV1 is value of asset transfer. Full stop. Valuation rules under section 11 UA. Valuation rules under section okay, valuation rules under section 11 UA shall prevail. Okay, I'm not repeating that because you are aware of it. When we do the question, yesterday whatever you wrote holds good for that. Okay, so I'm not repeating that. Okay, whatever you see on the screen is the one by which I am going to value. So, okay, the one thing which I want you all, yesterday also I was telling is other assets, please take the book value. When I say other asset, there are two things in other assets. Okay, that is depreciable asset plus current assets. Depreciable assets plus current assets is what I call it as other assets. Okay, again examination tension every value will be given. Jewelry, land and building. Our mind will immediately take those values and leave it there. No, come back to the balance sheet. Come back to the balance sheet and see if there are other assets, because for stock and all, they will not give it to you. And even if for stock, they give you the fair market value, please don't consider that. For other assets, only the book value. So what are all the assets you should look for value is immovable property. Movable property, only listed shares, unlisted shares and investments. Okay, in quoted shares, unquoted shares, jewelries, okay, like that investment. Current assets, take as it is. Depreciable asset, take as it is. Okay, right. And the liabilities pertaining to that. FMV2, fair market value 2, FMV2 hyphen monetary consideration received or receivable. Monetary consideration received or receivable. Monetary consideration received or receivable plus value of assets received as consideration for slum sales. Value of assets received as consideration for slum sales. Okay, so FMV1 is the assets which I am giving away. FMV2 is the assets which I am getting. Okay, monetary plus stamp value plus quoted value, proportionate net worth, fair market value of jewelry, whatever it is. Here there is nothing called liability. Here there is nothing called liabilities. So the major change is FMV1 or FMV2. Okay, whichever. So that is going to be the questionable area also. Okay, net worth of the unit transfer, cost of acquisition. For that, my dear friends, consider only book values. Consider only book values. Okay, so this leads us to explain what is book value. Okay, what is book value? What is book value? This is beautiful. Book value here, I mean income tax books of accounts. And to recollect, is there a books of accounts for income tax? Yes, statement of income is our books of accounts. Statement of adila we do. Okay, right. So under that, okay, book under that, for land hyphen original purchase price. So ignore revaluation if at all there. Revaluation is never a concept. For land original purchase price. Sorry, for land, okay, original cost, okay, ignore the ignore the revaluation. For depreciable assets, for depreciable assets, for depreciable assets hyphen written down value as per income tax law. Next is important. Next is important. I want you to write it in a different color pen or mark it after writing. For goodwill. Uh, that's the beautiful answer. That's the answer. WDV as on 1/4/20. Yesterday we were seeing the goodwill, whenever it is sold, I will take only that. Okay, I will take that as cost of acquisition. WDV as on 1/4/20. Okay, full stop in the same point. However, for self-acquired goodwill, nil. However, for self-acquired goodwill, nil. Other assets, other assets, value prevailing in books of accounts like debtors, stock, etc. Value prevailing in books of accounts. reduce reduce all external liabilities, reduce all external liabilities, reduce all external liabilities, okay, external liabilities pertaining to the unit transfer. Reduce all external liabilities pertaining to the unit transfer. Okay, one thing I want the class to be nailing it into your mind is FMV1 and net worth will be the same working, values will be different, because we will always get confused. I'm reading the same thing, but why am? Because FMV1 is I take the fair market values. Net worth, I take only the book values, ignoring the revaluation. So those two things will apparently look similar, but they are not similar. But they are not similar. Okay, okay, okay. Before progressing, the numbers of question is chapter wise. The numbers of question is chapter wise. That's why you see it as question 3, because we would have done in unit and evaluation rules. In ULIP one question we did, and valuation rules we did one question. That's why you see it as question 3. Okay, right, friends. Okay, the first question: a company has two units, one engaged in manufacture of computer hardware and other in developing software. As a restructuring drive, the company has decided to sell its software unit as a going concern for slum sales for 385 lakhs. This will become part of FMV2. Okay, FMV2, in which it holds 74%. Okay, uh, um, I don't have an option, but I am asked to use the pen. Okay, வந்து நானும் I have always been telling no, my handwriting is horrible, but Mr. Dinesh Jain convinced me saying that let's together travel. Okay, Vikramaditya. The balance sheet being the date, okay, is like this: fixed asset, hardware, software units fixed asset is 200. Whenever you see fixed asset, it can have multiple things. It can have depreciable asset, it can have land also. Okay, while reading the question itself in the exam, be clear. Okay, there is an investments which we need to see the what is Slum sold: debtors, hardware unit, software unit, inventories. Debtors should be hardware unit 140, software unit 110. Inventories again, hardware unit 90, 5, software unit 35. Okay, and on the asset side I see a revaluation reserve. Whenever I am going to do net worth computation, whenever I am going to do net worth computation, I will should be careful on this. Okay, current liabilities, the software unit is in existence from May 2016, which means it is a long-term capital asset. Anyhow, indexation is not there. Following additional informations are regarding the fixed assets and investments which wholly belong to software unit. So every investment that is there is belonging to the software unit. Okay, now, okay, land. Okay, book value is 40 lakhs and stamp value is 72 lakhs. Okay, so I have okay, I'll come back to that. jewelry, depreciable asset other than goodwill. Goodwill not purchased, it's a self acquired goodwill. It's a self acquired goodwill. Okay, right? So that is 32. Now, friends, at this level, I just want to tell you the total of this is what is 200, which is there in the balance sheet. The total of this is 200. Okay, 40, 48, 168, 170, 200. Okay, the total of this is 200. Okay, that is what is there in the balance sheet. Okay, in unquoted in investments, now coming to investments is 100. Okay, 32 lakhs consist of listed shares, unlisted shares 40,000, I mean 32 lakhs, 40 lakhs, and other investment 28 lakhs. Other investment 28 lakhs. Okay, are we clear? Right? Ascertain the tax liability, what will be the best manner to save the taxes. Okay, so FMV2 is straightforward, given to us 385. FMV1 is okay. Whenever I am going to do FMV1, I will repeat it for net worth. At that time, only book values are relevant. This additional information is what is going to be for FMV1, okay, and not for anything else. சிரிக்காத இது நியாயமே இல்லை. Whatever it is, this actually PC sir asked me to for sure use pen. Start அப்படின்றாரு. Right. நேரா நோட்புக் இருந்தாலே எனக்கு எழுதுறது கஷ்டம். Shall we? Friends, in slum sales, in the examination answer also, leave 5-6 lines. That is the answer. Full value of consideration, less cost of transfer. Avlo the answer. Okay, leave that 5-6 lines. Now I am not doing that. I'm there. And then go to the working note. Working note, make it clear what is FMB1, what is FMB2. FMB2, in this case, you need not compute, it is direct. And then what is net worth, that will make it. So I'm going for computation of assets transfer. Yesterday, somebody who had commented, I saw it very late, that my voice, there is a lagging or there is a lag. If it is temporary, please wait for few minutes. If it is temporary and it is set right, fine. If it prolongs, just text me. I will check with the network. Otherwise, it temporary lag. I think my this time you are used to it. It's consistent and normal. Okay, of asset transfer. Okay, first I am going into fixed assets. First I am going into fixed assets. Okay, investment also, the total I want to prove it to you. 32 plus 40 plus 28 will make it 100. Okay, 32, 42, 72 plus okay, that's why it is 100. Okay, now, okay, I'll tell you how what mistakes are popular to happen. Now, first land. Other than goodwill, I will take the book value, which is 120 lakhs, which is 120 lakh. Goodwill, goodwill, my dear friends, had it been purchased goodwill, had it been purchased goodwill, my approach would have been to take FMV as on 1420. Yesterday we saw, okay, whenever the goodwill is getting sold, okay, whenever we get, okay, WDV of goodwill as on 1420, whenever I subsequently sell, that becomes the cost of acquisition. So here also that principle is the same. You can relate it and see that principle is the same. Anna, in this question it is not purchased goodwill. In this question they clearly say that goodwill which is not purchased, okay, so I call it as self acquired, and COA of self acquired goodwill will be nil. COA of self acquired goodwill will be nil, always, okay. Actually jewelry is not here he is here in investment, I mean in fixed asset. Fair market value on the date of transaction, on the date of slum sales. Okay. The registered valuer has given it as 12 lakhs. The registered valuer has given it as 12 lakhs. Okay. The registered valuer has given it as 12 lakhs. My dear friends, I again tell you, for depreciable asset other than goodwill, I have ignored the fair market value. The reason is simple, because only the valuation rule says take only the, for depreciable asset and current asset, take the book value. Is it clear so far? Investments. Listed shares. The question says, I hold 10,000 shares and the present market value is 600 per share. I hold 10,000 shares, 60 lakhs, 60 lakhs, unlisted shares, unlisted shares. I call it as proportionate net worth. Okay, I call it as proportionate net worth. What is proportionate net worth? Net worth of the investee company divided by total number of shares of investee company into total number of share. Okay, 2.5 crores. Total share capital is 1 crore. Please don't understand it as total shares. It is total share capital. It is total share capital 1 crore and 10 rupee shares. Okay, so 10 lakh shares. Okay, and I am holding 4 lakh shares. 40% of the shares I am holding. Okay, please understand it is the total share, small nuances. Okay, unlisted shares 2.5 crores divided by 10 lakh shares into 44 lakh shares, sorry, into 4 lakh, okay, into 4 lakh shares, okay, 2 crore 50 lakhs divided by 10 lakhs into 4 lakhs. I call it as, I mean, it's not law, but I call it as proportionate net worth. Proportionate means the proportion I am holding for that, what is that net worth? For that, what is the net worth? Okay. and others, other investments other than equity. So I invest in preference shares or other things. What should I take? Directly, I should take the fair market value. Directly, I should take the fair market value for all other investments other than equity shares or other than listed shares and equity shares of unlisted companies. I should take only the fair market value. So I take 30 lakhs. I take 30 lakhs. Okay. Here is the point I want to stress upon. Since we have done the major part, we become okay. We are closing. No, no. Go back to the balance sheet to see current assets. Go back to the balance sheet. What you have completed in the balance sheet is only these two parts. Okay, what you have completed in the balance sheet, this 200 you have completed, this 100, but there is a data, there is in examination tension, these things are bound to happen, but come back to the balance sheet to see. Okay, the software unit is transferred, debtors 110 lakh. Inventories 35 lakhs. Are you clear? 4 crore 40. This is FMV 1. Start computing net worth also before going into the main answer. Depreciable asset 120 lakhs. Okay. Goodwill nil. Always self-acquired goodwill. Cost will be nil. Self-acquired goodwill. Cost will be nil. Okay. Jewelry 8 lakhs. Jewelry 8 lakhs. Investments 100 lakhs. Investments 100 lakhs. Okay. Investments 100 lakhs. I have assumed that revaluation reserve is only for hardware unit and not for software unit. Debtors 110. Debtors 110. Okay. Software unit inventory. Inventory 35 lakhs. Less current liabilities. Okay. 90 lakhs. 90 lakhs. Net worth of the undertaking. Net worth of the undertaking 3 crore 23 lakhs. Okay. Please remember, we repeated the same things only. We repeated the same things only. Only difference I made here is, okay, I have only taken the book values. Okay. Net worth is based upon book values. Now, computation of capital gains. FMV1, which we already computed. FMV2 is the monetary consideration I received. Okay. Whichever is higher becomes the full value of consideration. Okay. I think there is no expenses provided. So this becomes the net consideration as well. Just give me a minute. Hence, not exactly the same because I changed a bit. But I just want to tell you that how we worked out it last year, almost the same question. Till last year, we just computed the net worth. Okay. Um, okay. We just computed the net worth and take the full value of consideration only as not the same question, but generally I'm telling you minus. There is nothing called that FMV1 or FMV2 till last year. Only for net worth we do the working note. Otherwise, we continue with the same answer. Okay, but that is the major change. That is here the same question last year in the examination, it would have been only 3 crore 85 lakhs as the full value of consideration. Only for this the working note becomes essential, but the amended law makes it even to work out FMV1. And we'll go to the next question to see how FMV2 changes. Okay. uh, int- Intention behind this is people are selling it at a very lower cost. Okay. And the second part of the question, my dear friends, people are trying to avoid the taxes big time. I know GST is getting avoided big time because of slum sales. That is also sealed now. Okay. I have seen cases. What would be your advisor without changing the sale consideration? How to do that? There are only two ways of doing it. Make it demerger, in which case it is not a transfer, not regarded. But the disadvantage is that transferee company can record the assets only at the book value prevailing in the books of the transferor, in the value prevailing in the books of transferor, or the other answer of it is you are already holding 74% by another 26%, you will get 100% holding, so that the company will become a 100% subsidiary company. Okay, so that any transfer between holding and subsidiary company, provided the other company is an Indian company, shall not be considered as transfer. Okay. These are all the two things. Just write it and keep in all slum sales question. This is also a mandatory part. Okay. uh, how to plan tax. Okay. Point number one, already the transferor is holding 74%. Already the transferor is holding 74% of equity. If additional 26% is also purchased, if additional 26% is also purchased, if additional 26% is also purchased, then then the transferee company will become a 100% subsidiary company. Then the transferee company will become a 100% subsidiary company. Full stop. Continue. Any transfer by holding company to 100% subsidiary company, any transfer by holding company to 100% subsidiary company is not regarded as transfer, hence no capital gain. Is not regarded as transfer, hence no capital gain. Put a or and go to the next statement. Or if it is transferred in a scheme of demerger, if it is transferred in a scheme of demerger, then also it will not be regarded as transfer, no capital gain. Then also it will not be regarded as transfer, no capital gain. May I move on? Okay, friends. Okay. I'm going into question number 4. A company decides to, in the question number 1, I need to work out the tax liability. The question asks for the tax liability. Okay. Computation of tax. Tax at the rate of 20% on LTCG and surcharge at the rate of 7%, assuming income of the company does not exceed 10 crores. Otherwise, I would have done 12%. Sorry, I just saw the message. The mobile was little away from me. This is my network. This is the network computation. Okay, thank you. Okay, I'm going into the next question, my dear friends. Okay, question number 4. Company decided to sell off its unit in slum sales. The assets and liabilities are as follows: quoted shares, debtors, stock and others, liability. Okay, okay, sorry, it's not a balance sheet. Land, building, plant and machinery, furniture and fixture, quoted shares, debtors, stock and others, liability for land. Compute capital gain in each of the following circumstances. The consideration for sale is 2 crores. This is FMV 2. Okay, information regarding assets and liabilities. Okay, stamp value is 75 lakhs. FMB of quoted shares is 15 lakhs. So we need to work out FMV1 or FMV2, and anyhow we are also going to work out the net worth. Okay, computation of, I'm doing both. Okay, FMV1 and net worth, so that I we save some time. Okay, I am doing for case A. I am doing for case A. Hmm? Example பண்ணலாம் because it is just a working note. main answer இருக்க போறதில்ல. So you can do it in exam also, so that you will save time. Okay, land in FMV1, I will take the value of immovable property. Okay, it is given as immovable property. So we should assume this for land and building as such. For both these things as such. It is for land and building as such. Okay, they have not given it for land. It is for, and for immovable property, we take the stamp value. Okay, land and building. Here in FMV1, I will take 75 lakhs, whereas in the net worth, I will take only 26 lakhs plus 16 lakhs. I am repeating, while doing for full value of consideration FMV, I will take the stamp value, whereas if it is for the purpose of books, okay, net worth computation, I will only take the book value. I will only take the book value. Plant and machinery, in both the cases, 41 lakhs. So this will give you a good idea about what is the difference that we get between net worth and FMV1. Furniture fixtures, both cases 14 lakhs. Quoted shares. Quoted shares, as per books, I have 475, whereas the fair market value is 15 lakhs. Something like loan, don't assume it as revaluation, take it as loan. One crore 96 lakhs I get in FMV1, 1 crore 52 lakhs 75,000 as net worth. Okay. Full value of consideration, full value of consideration. Okay, the FMV2 value is 2 crores. FMV2 value is 2 crores. Okay. FMV1, which is 1 crore 96 lakhs. FMV2, which is 2 crores. Okay. Whichever is higher will be considered. Okay. I don't think there is any expenditure. So I consider this as net consideration also. SCOA. So sometimes in one question I missed the key parts like okay, so please take it as long-term capital gain, but be sure in examination they'll give you the number of units. Here please consider it as long-term capital gain. Forty-seven lakh 25,000. So the net worth, why I am again and again stressing is in examination, net worth போடும்போது don't look at fair market values. That will only be a confusing factor. Otherwise, this is how LTCG needs to be computed. Case B. If the consideration for slum sales is 1 crore 90 lakhs, that is FMV2 is 1 crore 90 lakhs. Sorry, this is 1 crore 90 lakhs. May I move on? Okay, may I move on, my dear friends? Case C. The consideration of slum sales is allotment of 2 lakh equity shares of rupees 10 each at a premium of 40, which means 50. However, the market value is 75 and allotment of 50,000 shares, which is 120. Stamp value being 75 and 15. Okay, so here is the case where I am changing FMV to. Okay, this is the case because of which the entire amendment came into. That is, in consideration, they are not giving monetary consideration. They are allotting 2 lakh equity shares, and the present value of the shares is 75. And allotting 50,000 preference shares, which is 120. Which is 120. So, in case C, okay, computation will go like this. FMV1 is straightforward, that is the same amount which we got in the first one, 1 crore 96 lakhs, FMV2. Okay, FMV2 is, okay, 2 lakh equity shares of 75 each into 75 plus plus 50,000 equity shares into 120. 2 lakh equity shares into 75 plus 50,000 into 120. So that is the key change here. That is the key change. FMV is also in the last year it would have been zero. And remember, last year there was no FMV1. So you can see the impact. The loss of revenue is so huge because courts started interpreting monetary consideration. Yes. Okay. Okay. 50, 25. Okay. So please remember, my dear friends, the possibility of question is more because of the amendment. Okay, the possibility of the question is more. They can relate goodwill with this and ask also. Okay, in which case you should take the 1420 value. Okay, it can be anything. Possibility of question is more. Please remember that. Okay, with this, the next amendment of capital gain is over. ULIP we saw one. Okay, ULIP we saw one. Just as valuation rules we saw, and come to this as okay. The third amendment is for dissolution or reconstitution of a firm. Okay, Section 45, subsection 4 has undergone a big change. Section 45, subsection 4 has undergone a big change. What is that change? Why is that change? That's what I'm going to initially tell you and then take you to the amendment part. Okay. There was always a debate that was going on in the initial days. Shakti trading or a famous case law, very old case law. 45.4 was taxing the dissolution of a firm. What happens if a partner retires and he is paid some assets, etc.? We were not clear. Shakti trading case said that it is not taxable because the law did not say so. Then they amended 45.4. I am not talking about recent times. I am not talking about recent times. 6 years back, they amended this section 45.4 as distribution of asset to partner on dissolution or otherwise. They included the word or otherwise, saying even if it is a running firm, if it distributes. But still there were computation problems when it is taxable, how it is taxable arise. So before going into 45.4, let us recollect 45.3. What is 45.3? Partner introduces capital to the firm. Partner introduces capital to the firm. Value recorded in the books is considered as full value of consideration. All of us? Partner introduces capital to the firm, value recorded in the books. The firm distributes the assets to partner. Reverse case. Then the question was, is on dissolution? Then 45.4. On retirement, then also for during a going concern. Just like that, a partner takes over an asset. What it is? People were little jittery on that, or the law was not clear. And this comes under the chapter of capital gains. Why I am saying this is, if I distribute stock in trade, not at all taxable. Then a stock in trade is not a capital asset. Okay, so it is not going under taxability. So that again became a bigger problem. What if I am distributing stock in trade? 45.4 does not cover that. So the law was amended, and the law was amended with effect from 2021. You all know the reason. If I introduce a budget on 1/2/20 or 1/2/21, saying that this is applicable for from 1/4/21, that 2 months all partners. So the law was amended with from or with 2021 or from 1/4/20. So it is an amendment which is applicable for the, but question is going to be for 21-22 only. One thing I ensure, I am not taxing unfair way. I have always told you in capital gains chapter, only when you get the benefit, you have to pay the tax. Be it insurance compensation, be it compulsory acquisition, be it FMB, asset converted into stock in trade. Okay, here also, I am not going to tax it in the year of dissolution, in the year of anything, in the year in which I give it to the partner. In the year in which I give it to the partner only, this is going to be taxable. So that is being ensured. That is being ensured. Okay. So in the stock in trade transfer pannona, then I have to amend something like 43 CA. I have to introduce a section and then come under 45.4. So the ministry decided that we will introduce a new section as such. And they introduced 9B as a section. And when they introduced 9B, they did not scratch 45.4. They maintained 45.4 also. Okay. When they introduced 9B, they did not remove 45.4. Okay. 9B is also there, 45.4 is also there. Now, will it amount to double taxation? Debatable. Debatable. I'm not saying yes, I'm not saying no. It is debatable. 9B is also there, 45. 9B is introduced, 45.4 is not removed. And then people started understanding. I know many people who started understanding, okay, 9B is for the firm, 45.4 is for the partner. No, both are for the firm. In both these cases, who pays tax? The firm pays tax. In both these cases, it is the firm which is going to pay the tax and not the partner. So that is also being taken care of. Okay. What is being taxed? In 9B, it is distribution of assets as it is transfer of asset. 45.3 said partner introducing asset is taxable in the hands of the partner because there is transfer and full value of consideration will be value recorded in books. Here 45.4 says, 9B says, if you give asset or stock to the partner, if you give asset or stock to the partner, that is transfer. If it is stock, it is taxable as business income. If it is asset, it is taxable as capital gain. 9B. 45.4 says the partner's capital account balance. Let us take 5 lakhs. You pay 25 lakhs. Why are you paying? The partner has a capital account balance of 5 lakhs. You pay 25 lakhs. So the 20 lakhs I am going to tax it here. Okay. So there is a 9B, there is a 45.4 which has to be together understood. Okay. Before going further into it, I'm taking 45.4 for a minute and explaining you what I told you now. Capital balance is 5 lakhs. Why should I pay 25 lakhs? Here is where I am bringing in whatever you have been studying from your 11th standard. Whenever there is a retirement, whenever there is a change, you put in the partner's capital account, by balance brought down, by goodwill, you will value it. It is a self-acquired goodwill. Okay, 3 years purchase of the past 5 years profit. You would have valued it and credited it in his capital account. Then whatever assets are there in the firm, you would have revalued, and revaluation profit you would have credited. If I add all those things one day, I will pay 25 lakhs to him. Devaluation is never a concept. Self-acquired goodwill is never a concept. Income tax law said, boss, I want to 5 lakhs you should give. You paid him 25 lakhs. The maximum argument you can have is, even if it is true, tax him, boss. Why me? Okay, there is a reason why you are being taxed. I'll explain you also. Logically also, there is a reason why you are being taxed and where you are going to get the benefit. So it is a very elaborative aspect to understand. Having said that elaborative aspect to understand, I also want to tell you that initially when they introduced it as a bill, they themselves got confused. I'm not at all joking. They introduced 45.4a. அப்புறம் why should Parliament be confused? Anyhow, they don't understand anything. Leave it to CBDT to clarify. So they said, I will remove everything. Let CBDT clarify. There is something known as attribution, for which CBDT circular was 2 lines. Example was 15 pages. Okay. Circular was 2 lines. Example. Okay. Just give me a couple of minutes. I'll have coffee and come. So friends, this is going to be the key factor 9B as well as 45.4. The whole point is how to attribute it. If we understand that, we are through with it. In our notebook, taxation of, the next word is important, reconstitution of firm. Taxation of reconstitution of firm. It is no more dissolution. The word is Reconstitution, taxation of reconstitution of firm. First, let us ask ourselves, what is reconstitution? Please write, what is reconstitution? Okay. Again, I tell you whatever you studied in your 11th standard. Okay. Admission, retirement, which includes death also always. Okay. Admission, retirement, dissolution, and most importantly, change in profit sharing ratio. There is no admission, there is no retirement, but still there is change in profit sharing ratio. That is also considered as reconstitution. Okay. Um, on the heading itself, I also want to clarify that this is, though I use the word firm, this is also applicable for AOPBOI. This is also applicable for AOPBOI. So wherever we are using the term partner, we are also using the term member. Wherever we are using the term partner, we are using the term member. Wherever I am using the word firm, I also mean AOPBOI. Okay, right. So it is reconstitution, even change in profit sharing ratio, even change in profit sharing ratio constitutes reconstitution. Okay, Anna, just because there is change in profit sharing ratio, I'm not going to tax it. There should be a distribution of assets, or in the year of distribution only. I am just safeguarding our tax law because people were using it as a means of taking away money. They, okay, because 45.4 only spoke about dissolution, then they added the word or otherwise. So otherwise, retirement too illa. 50-50 lane, they started sharing 99 is to 1. For reducing its profit share, he is given assets, which was the same partners only continuing. A new partner walks in, they give asset to another partner. So because I am not saying these are taxable, I am saying that these constitute reconstitute, and because of this, if there is a distribution, obviously distribution is going to happen only in the case of retirement or dissolution. Okay, so don't worry. How these things are going. So, specified a person is partner, member, entity is firm, and it is applicable at the time of reconstitution. Provisions of section 9b in your notebook. Provisions of section 9b. Provisions of section 9b. Under that, one, transfer of asset or transfer of asset or stock in trade to partner. Okay, when I say partner, I mean member also, is taxable in the hands of the firm. Is taxable in the hands of the firm. Please understand, if you transfer asset or stock in trade, why I bring 9b is this reason. Now, if I bring it in the capital gains chapter, I cannot put the word stock in trade. The whole purpose of 9b is this word called stock in trade. In that I would have made the amendment in capital gains chapter itself. In capital gains, stock in trade is not a capital asset. So I am unable to make the change there. I brought 9b. Okay. Point number 2. Fair market value. Fair market value on the date of, take a different color pen, distribution. I am not taxing it unless it is distributed. Fair market value on the in the year of distribution, on the date of distribution, shall be treated as sale value or full value of consideration. Shall be treated as sale value or full value of consideration. Fair market value on the date of distribution shall be treated as sale value or, okay, full value of sale value. Okay. Third, C. For stock in trade, the income is taxable under PGBP. For stock in trade, the income is taxable under PGBP. For for capital asset, gain is taxable under capital gains. Clear to you? Okay, right. Friends, to just elaborate, tax implication on deemed transfer. Deemed transfer. Okay, to whom? What is deemed transfer? When specified person has been explained here to mean firm, partners, etc. I mean member or partner, etc. receives capital asset or stock in trade. Why I am stressing upon this point is, if I pay any monetary consideration, 9B கிடையாது, 45(4) உண்டு. If I pay to the partner who is retiring 40 lakhs of cash, I am not at all coming under 9B, talks about capital asset. Capital asset, we know property of any kind held by the assessee, under cash கிடையாது. Okay, or stock in trade. Okay, right? So where specified person receives capital asset or stock in trade during the previous year due to, it can be due to dissolution or reconstitution, then it is taxable. Okay, remember it is taxable only in the hands of the firm. It is taxable not in the hands of the partner. இது மாத்திரம் இல்ல 45(4), okay, in which year it is taxable? It is taxable in the year in which he receives the assets, that is the person, the specified person, or in other words, from my angle I can say the year in which I distribute the asset. From the firm's angle I can say it is the year in which it is distributed. Okay, and for this purpose, gain on capital asset is capital gain, and profit and stock in trade is business or profession. Fair market value on the date of receipt by the specified person, which is nothing but date of distribution. Okay, the law might talk it from the receiver's end, but that law is taxing only the distributor or the payer. So I directly talk it from the payer's end. I will say it is on the date of distribution will be full value of consideration. Okay, I want you to understand this. It is not the fair market value on the date of reconstitution. Okay, it is only the fair market value on the date the specified person receives it, which is distribution. So if they want to twist, they can give it to you, but be clear, it is only on the date of distribution. Am I clear to you? Right. Now comes 45(4). Now comes 45(4). Okay, so this is very simple, straightforward computation. Okay, section 45(4) hyphen taxation of excess payment made to a partner. Taxation of excess. When I say excess, what is excess is nothing but over and above the capital balance. Okay, right? Under that point number 1, excess payment is equal to monetary consideration plus fair market value of capital assets, fair market value of capital asset distributed to the partner. Repeating, monetary consideration plus fair market value of asset distributed to the partner minus balance standing in the capital account. Balance standing in the capital account. Excess அப்படின்னு நான் என்ன சொல்றேன்னா, what do you I mean by excess is your capital account balance, what I am distributing. In the sense, what is the firm distributing? If the firm is giving you 50 lakhs, but your capital account balance is only 30 lakhs, that 20 lakhs is excess for which the firm is only going to tax it. Whether it is LTCG, STCG, I will tell you how to compute it. But this is how it is computed. Okay. Let me go one by one. When I told you here for specified 9B, it is capital asset and stock in trade, no monetary consideration. Correct? No monetary consideration. But whereas when I come to 45.4, I will not take stock in trade because it is not a capital asset. It is not a capital asset. That's the income monetary எடுத்துப்பேன். ஆனா I will not take stock in trade. That's why 9B itself came, because I cannot redefine the capital asset contribution. Okay, is there any questions? If there are questions, only by text, but as of now, leave it to me. I will explain the full concept and then I will go for questions. Okay, now coming back. So how to do this monetary consideration is simple. Fair market value of asset distributed is simple. Whatever is the capital asset distributed. What is this capital balance? இப்போ நான் உங்கள்கிட்ட சொன்னேன், what is capital balance? By balance brought down, by goodwill, that is 3 years purchase of fast 5 years profit. That is a self-generated goodwill should be ignored. By revaluation of asset will be ignored. So heading capital account balance. Heading capital account balance. This will include, my dear friends, please write down. This will include A, opening capital, B, all monetary transactions, C, profit on, you can write it more clearly as share of profit, or if you have written profit also fine, share of profit on sale or distribution of asset, share of profit on sale or distribution of asset on reconstitution, share of profit on sale or distribution of asset on reconstitution. So what are all things will come under capital account? I will take these things. Whatever is your regular transactions, I will take. Okay. In that, the third point is important, where I am going to give you a bigger explanation. Share of profit, okay, on assets distributed, assets sold or distributed on liquidation. The next is all the more important. What should not be included? What is not included? What is not included? A, revaluation of assets. A, revaluation of assets. B, okay, uh, share of self-acquired goodwill. I say goodwill, any asset which is self-acquired, any valuation. It will not be included. Okay, okay. Allow me to explain you one of the CBDT's example. Okay, CBDT has entirely given the circular more in the form of examples only. And I am going to take up a CBDT circular as example, then work out our own questions. Then work out our own questions. Okay, I am going to take CBDT circular as example. Please understand. There are three. Okay, you, it is enough if you understand. You need not write it. As I told you, this material will be given, but to the point understanding will make it more clear. I am directly taking the CBDT circular and making you, and then we'll work out our own questions. There are three partners ABC in a firm, each having equal share. Each partner has a capital balance of 10 lakhs. So 10 lakhs is the opening capital balance on pre-dissolution, whatever. There are three lands, S, T and U in the firm, and there is no other capital asset in the firm. Book value of each land is 10 lakh. All these three lands were acquired more than 2 years ago, which means it is a long-term capital asset. Which means it is a long-term capital asset. That's why they have given this. Partner A retires. The firm revalues its land based on the report from registered valuer. As per the valuation report, fair market value of land S and T 70 lakhs, fair market value of land U 50 lakhs. So, what technically we will do in partnership is 70 minus 10, each land is 10 lakhs, 70 minus 10, 60 into 2, 120 plus this land 40, 120 plus 40, 160. இது மூணு பார்ட்னருக்கும் நான் by revaluation reserve. Okay, number 11th standard, we have studied this. Whenever there is an admission or retirement, the existing assets will be revalued and the partner will be credited. So, by revaluation reserve, whatever is the amount, 60 into 2, 120 plus another 40, 160 divided by 3, somewhere around 53 or whatever is the amount, you will distribute it to all the partners. You will distribute or credit it. Okay, or you will credit it. Ipo, I'm asking you, can I take that credit as capital account balance? No, that is what you have written. I should not consider revaluation. So, if you look at A's capital account for a minute, opening balance 10, revaluation reserve 53. If your balance is 63, you give him 63, you will not have any capital gains. But the law says don't give this 53. Still it is only 10. Okay, right. So that's why I'm going to pay more. A, on the exit of partner A, the firm decides monetary consideration of 11 lakh and land U, which is having a balance of 50 lakhs. 9B operative for land U. 9B operative for land U, but not for monetary consideration. 45.4 applicable or operative both for land U and for monetary consideration. Okay. So first what happens in 9B? 50 minus 10, 40 lakhs. Okay. That 10 lakhs should be indexed. I also know that it should be indexed. It's more than 2 years. So I will index it and find out the profit. And find out, take your time in understanding what I am saying. 9B says Boss, you have transferred land to partner A. It is regarded as transfer. Partner introducing capital asset or firm distributing capital asset to partner, it is treated as transfer. So you need to tax them. So 50 minus 10 or index the cost of acquisition of 10 will be considered as profit minus taxes paid on that. The remaining amount will be distributed to the partners as share of profit. As share of profit. Whenever, if this is not distributed, in the 50 lakhs is not distributed but sold, you would have got profit. And the profit ஒரே ஒரு partner ka. That is also available for all the three partners. So, this is simply what we studied in our 11th standard. We are recollecting. We are recollecting whatever we studied. Okay? Whatever your accounts teacher taught you in your 11th standard. We all did this mistake in our 11th standard, or rather, you are all very creamy layer student. I have done this mistake. I will directly credit it to the retiring partner. Then only I will realize, oh, no, profit on revaluation or profit on distribution, it should be for all the three partners. Goodwill, I will compute and directly credit it. No, I should only credit by retiring partners share of goodwill. Okay, right? So please understand, this will have an impact. And the profit can I include in the capital account? The answer is yes. That is what you have written in the third point of what is to be included. Share of profit at the time of sale or distribution, both. So, now look at this circular progressing. In accordance with 9B, it would be deemed that the firm has transferred partner A, so 50 lakhs. Let us assume that the ICOA has 15 lakhs. In the circular, I am not at all, this is not my assumption. This is circular itself. I am just reading the circular, deciphering it and trying to put it in smaller. And the circular with all good that circular people should also start doing CA. They should read business communication first. Comma, punctuation, edum kadayadu. Okay, if you look at that, okay. So now on account of section 9B, they will result in a capital gain of 35 lakhs because 50 lakhs less ICOA 15 lakhs 35 and 20% it's a long-term capital asset, so 7 lakhs. Assume no surcharge, no HEC because of understanding. So what happens? 35 lakhs minus 7 lakhs. 35 lakhs minus 7 lakhs. You have an amount. Okay, but this is only capital gains. Books pragaram, what is the profit? Abdin pathingana 40 minus 7. Because books does not have the concept of indexation. Books of accounts does not have the concept of indexation. Okay. If you look at what is the difference between our profit and loss account and capital gain, okay, in all the chapters we have seen, by profit on sale of asset in our profit and loss account, what is that? That is just the difference between sale value minus cost price, or sometime book might have revaluation, whatever it is, that is what. But when it comes to our income tax law, we in our doing our PGBP and our adjustment, we will put less profit on sale of asset not considered as business income. Then for capital gains, we will recompute. இதுதான் perennial dispute in MAT provision. In MAT also should I exclude it? Okay, because in MAT is format based. Format does not tell us to, okay, I know I'm dumping so many things. Just flow vandirudhu. Okay, I'll go back to this. So, as per books of account, profit is only 33. Sir, should I reduce tax? Yes, we will reduce tax. Neenga, again, I'm a very strong believer that the bestest learning we had is school. So again and again, I'll take you back to school only. Number, we never distribute the net profit as per P&L account. We do P&L appropriation account. Interest on capital, interest on drawing, tax எல்லாம் போட்டுட்டு, and then there will be a profit that will only be distributed to the partners. That will only be here. Also I am sticking on to the same principle. Okay, though I have a profit, this is direct sales profit, so 33. In this, A, B, C are going to share equally. So the now coming back, the net book profit is 33 lakhs. To be credited to three partners, 11 lakhs each. Now what will be A's capital account? 10 lakh opening balance. Revaluation I will not take. Okay, none of the revaluation. Plus 11. His capital account will be 21. What did I give him? Land of monetary consideration of 11 lakhs. Land of 50 lakhs. 61 minus 21, 40 lakhs, the firm will pay tax. It is not A, it is the firm which is paying tax. Okay. This exercise is to be required to be carried out. 9B mandates that. Okay, so that's fine. As against the capital balance of 21 lakhs, A received 61 lakhs. Thus 40 lakhs is required to be charged under 45(4), for which they will be paying tax. First part of the discussion, which I think is the simpler part of the discussion, is only over. Okay, right? To repeat, 9B I will compute for the land transfer. For the same land transfer, I will come to 45(4). Okay, on apparent reading, you will see such double taxation. For which I have said yes and no. I have not said yes, I have not said no. I have said yes and no. Okay, fine. So, this is one part of indication. Now comes the major question. Sir, you will all have an argument saying, why did I pay that 61 lakhs? It is because these two other lands are also revalued. Nobody is going to pay him, okay. I have revalued this two lands. 10 lakhs becomes 60 lakhs. Into 2, 120. On this, on that his share is 40 lakhs. Other than the 40 lakhs, which you are getting there. That 40 lakhs you are getting there is nothing but this 40 lakhs. By revaluation, I credited it. I prepared a P&L account, and in that P&L account, I have credited it. Now you are not allowing that. Income tax department says, yes, I agree with you. I will give you one impact. Yes, a part of this is you have paid tax. Do one thing. Whenever you sell this asset, that is the asset which is still in the firm, which is actually revalued, but revaluation not given impact in the income tax books. Whenever you sell this asset, whatever is the amount attributed by me, reduce it from your sale consideration. Reduce it from your sale consideration. This is the draftman's brilliance. If had he said add it up to your cost of acquisition, then indexation problem ellame varum. He said no, reduce it. Okay. Now I'm again going slow on this point. On account of Rule 8AB, this 40 lakhs is to be attributed to the remaining assets. The remaining asset in the given example, I had S, T, U. This U is gone. Now I have to attribute it to S and T. In what ratio will I attribute? Ratio of their revaluation. Ratio of their revaluation. இதுவும் revalued upward by 60, இதுவும் revalued upward by 60. So 1 is to 1. Suppose if this is 50, this is 40, 5 is to 4. Whatever is the ratio of their revaluation on the basis of increase in their value due to revaluation based upon valuer's report. In this case, as per revaluation, they are 60 lakhs each. So, I mean, each are revalued upward by 60. So, 20 lakhs is attributed. Sorry, attributed now. Henceforth, can I increase the value by 20 lakhs? No, boss. In income tax law, there is no concept called revaluation. Either land okay, but generally you cannot claim depreciation and all. What is the use of this revaluation? Whenever these lands get sold, the amount attributed would be reduced from the sale consideration. So suppose after 2 years you are selling land T, whatever is the sale consideration less amount attributed 20 lakhs you will reduce and take the net sale consideration. So coming back to this 40 lakhs which you said as capital gains, okay, is it a long term or short term capital gain? Is the remaining asset long term or short term? Long term. So this is also long term. The remaining asset is short term. This is also short term. The remaining asset is a combination of long term and short term because it also has depreciable asset. Proportionately divided. Tax it as long term and short term. I will do questions on all these things. Okay, but I'm just giving you the amount of 40 lakhs which is charged to tax under 45(4) shall be long term as it is attributed. It is based on attribution and not on the asset transfer. It is based upon attribution, so it is long term. Okay, I am redefining the circular. The circular said in the example number 1, ABC or partners 10 lakhs is their share, okay, is their capital balance. They had 3 land. Land is also 10 lakh. But the current market value of the land is 60, 60, 50. Mr. A is given that 50 lakh worth of land. First, in the 50 lakh 45(4) this for this 50 lakhs asset distributed to partner 9B. Why it is not coming under capital gain but going under 9B? It is chargeable under capital gain only because instead of asset had you given stock in trade, it was going untaxed. It was going untaxed. So now I want to bring it to tax. That's why I brought it under 9B, both stock in trade and capital asset. So one side I computed the capital gain for the land given to partner over. For that I paid the tax. As per books of accounts, sale value or the distributed value minus capital balance minus original cost is profit on sale of land. Minus tax is the net profit to be distributed to the partner. I distributed that also over. Now comes 9B is over, 45(4) comes into play. 45(4) comes and says, okay, he has an opening balance of 10 lakhs plus 11 lakhs on this asset which you have transferred, share of profit. Okay, so 21 lakhs you pay him, fine. There is no, he is not getting anything. But you are paying him some 50 lakhs, for example. Okay, you are paying him some 50 or in this case 61 lakhs. That means there is another 40 lakhs which I am going to tax. Tax it only in the year of distribution. That 40 lakhs is taxable only in the year of distribution. Why that 40 lakhs came is because the other assets in the firm are revalued. So based upon that other assets status, whether it will be either long term or short term. After determining long term or short term, whenever those other assets are sold from the sale value, the attributed amount will be reduced. What is attributed amount? Attributed amount is based on the revaluation of the asset. Okay. This is just the CBDT circular which I have given. Okay, you will get this, don't worry. The CBDT circular's explanation, I have just split the circular into smaller paragraphs for our understanding. Okay, that's all. I haven't done anything extra. The circular as a second part, actually this part they need not have. ABC 10 lakh, STU, and there is no capital and no other capital asset. All these lands were acquired 2 years ago. Book value of the land is 10 lakh. Partner BA wishes to exit. The land U, which has a fair market value of 50 lakhs. Cost of acquisition 15. So same 11 lakhs, 21 lakhs in this, okay. In this case, the land U would have been sold. Everything would be monetary consideration. No change. In the last case, Mr. gives him 61 lakhs of money by selling land. You have written in your third point, share of profit either on sale or on distribution. So no change. Example 2, please don't read it. Example 1 or a repetition. The difference between example 1 and example 2 is, in example 1, I gave both land and money. Here I am only giving money by selling one of the land to the external party. Be it you sell it to the external party. The difference is 9B is not operative. Sell panna namakku normal capital gains operative. There is no other way in which the example 2 is different. It is not taxable under 9B. It is taxable under normal capital gains provision itself. If you sell it to an external party, why do you need 9B? 9B is when you give it to the partner, you sell it to an external normal capital gain provision. So there is no change. Okay, income tax will not lose 1 rupee of revenue. Don't worry. This is what is going to make it more interesting. Example 3. 3 partners having 1/3. Each partner has a capital balance of 100 lakhs. There is a land S which has a book value of 30 lakhs. Patent. Patent is a depreciable asset. Basically, it is a depreciable asset. The written down value is 45 lakhs and there is cash of 225 lakhs. The land was acquired 2 years before. So you have one asset which is a long-term capital asset, another asset which is a depreciable asset, short-term capital asset. They would have avanga 1 year back in the information kudukalena the short-term capital asset because it's a depreciable asset, but they have given, we will take it. We should not contend the CBDT, so we'll take it. Okay. Partner A exits. The firm revalues its land and patent based upon valuations officer's report. As per the valuation officer, land value is 45 lakhs and patent value is 60 lakhs. When I look into it, okay, land value, the piece of land 30. So land value goes up by 15 and patent value goes up by 20. Now the attribution is going to be 3:4. Whatever gain I am getting, $30 lakhs, 45 has become 15:15. Sorry. Okay. I accept and weak in maths. Okay. 15:15. 1:1. Sorry. 1:1. So the attribution is going to be in the ratio of 1:1. அது ஒன்னு புரிஞ்சுக்கணும் நீங்க. Attribution is going to be in the ratio of whatever is the capital gains after, okay, is going to be 1:1. Second thing, please understand, namakku vara capital gain, whatever capital gain is there, 50% is going to be long term, 50% is going to be short term. Before proceeding to the circular, I want to stop here and tell you that it is going to be so. On exit of the partner, firm decides 75 lakhs and land, yes, so 75 plus 45. Okay, so only attribution is now to patent, I think so, or if at all. Okay, now on account of 9B, it is deemed that partner that the firm has transferred, yes, so that is one side. Okay, that is land transferred to partner A, their cash will not come. Okay, as against the capital balance of 105, how they achieve 105 is 100 plus profit share on land. Okay, that's why they got it 105. A received 120 lakhs, thus 15 lakhs is chargeable. Okay, and this 15 lakhs will be towards self-generated goodwill and patent based upon, okay, and both are short-term capital asset. Both are short-term capital asset. For this, I will go to a question and make you understand, don't worry. Okay, so that okay, 15 lakhs which is chargeable is towards short-term capital asset, 5 lakhs towards patent and 10 lakhs towards goodwill. If you read the circular, they will tell you that the self-generated goodwill etc will be. Am I clear to you? Okay, let's understand with our own questions. Go ahead with your doubt. Yeah, I have never recognized revaluation. Did I provide depreciation? At the time of sale of asset, I am taking the full value of consideration minus amount attributed. Yeah. Yeah. That is taxed. You are ignoring. You are written their notebook. Ignore revaluation credits. So I have not recognized revaluation. Okay. Our friend's doubt is income tax recognizing revaluation in this case? My answer is no. Let me take up an example. Okay, land value 50 lakhs, revalued value. I can in fact take it as building value. This will be more. Revalued, okay, value 75 lakhs. In books of accounts, you will pass an entry, building account debit to revaluation reserve to partner A, B, C, D, whatever it is. Under income tax law, I am not passing any entry. I am continuing to charge depreciation on 50 lakhs only. When this building gets sold, from the sale consideration, I will reduce whatever I have attributed to this. The only point you can contend is, at the time of sale, are you recognizing revaluation? My answer to that will be little technical, but I want you to understand. At the time of sale, whatever double taxation I made, I am correcting. I double taxed you. I agree with you. That's why I said the answer is yes and no. I double taxed you. I understand that. But I will correct it at a later date. Question number 1. Vijay, Vasant, Vikram are equal partners. Almost the circular is only given as questions. Okay. Are equal partners. Capital of the partner is 10 lakhs. Vikram decides to retire on 1st January 22. The firm will settles Vikram by paying 20 lakhs and transfer of land which is acquired for 8 lakhs. The firm, apart from the transfer land, has two other lands. The details of the land and the valuation as obtained by the registered valuer. Land A, which is what is transferred. Land B, uh, which has 20 lakhs, has become 60 lakh. Land C, 40 lakhs, has become 80 lakhs. Compute the income chargeable under the provision and also enumerate on the attribution principle. Assume the firm is not liable for any surcharge. It's available as a question also. Always start the answer with 9B. I appreciate the sincerity of the student. None of them took the pen also. 9B நீங்க ஒர்க் பண்ணிருக்கலாமே. Okay. Fair market value of land distributed to. One minute, friends. I think recently I thought for inter-capital gains, I will have the indexation. Let's do it without assumptions and all. I'll get the indexation for you. 317 by 200. Thank you. Our friend says that the index values are 317 by 200. Nadaraja. Hmm? இது தெரியாது தெரியாது இல்ல இல்ல அது சீமை. Okay. 7,76,256. 7,76,256 is the tax. Okay, this is as per 9B and it's over. 9B does not have anything else. There is no stock and all here. It is capital gain 776 256. Now I am going into smaller working notes to make it more clear. Okay. Computation of sale of land as per books of accounts. Sale means I'm taking even distribution. Okay. FMV of land distributed to Vikram. FMV of land distributed to Vikram 50 lakhs less cost as per books 8 lakhs profit on sale less tax paid. Friends, tax paid, and just to ensure that there is a small rounding off and just adding it by 4 rupees. We all know we do that. Okay. Profit available for profit available for appropriation to partners. Profit available for appropriation to profit to partners. Okay. The question says, okay, the partners, okay, are equal partners. So I will appropriate equally. Okay. Share of profit per partner 11 lakh 41 to 47. Is this clear? Okay. On the asset transferred, that is what is the third point you have written in capital account, which is why I took time to make you write that point. It can be direct sale of asset or it can be distribution to a partner. On that asset alone, compute the profit, compute the tax appropriable profit and apportion it. Now, computation of capital gains by applying the provisions of section 45 subsection 4. Computation of capital gains by applying the provisions of section 45 subsection 4. Okay, right? Okay, what is that is given to Vikram? Okay, the firm settles Vikram by paying monetary consideration of 20 lakhs and this 50 lakhs. Okay, full value of consideration, monetary consideration, which is 20 lakhs, fair market value of land distributed, which is 50 lakhs. Less cost of acquisition, which is nothing but capital account balance. Opening balance, the capital account of each partner is 10 lakhs. Share of profit on distribution by partner to partner. This 11 lakh 41,247. As of now, I am purposefully writing it as gross capital gain. As of now, I am purposefully writing it as gross capital gain for a particular reason. Once more, in that also 45.4. Goodwill is also a capital asset. That is different. That doesn't mean say you're clubbing two chapters. Here it is a capital asset. Goodwill is. I'll do the question. There is a goodwill question. 45, 78, 753. Now there are two questions in our, so up to the second part of our discussion is clear. Okay. Now there are two questions in our mind. Is this gain a long term or short term? And how to attribute it? The answer is together we are going to answer that. Okay. Statement of attribution. Statement of attribution. Attribution only for the remaining asset. The remaining assets are land B, land C. Okay. Revaluation upward of land B. Revaluation upward of land B. Okay. 40 lakhs. 60 lakhs minus 20 lakhs. Revaluation upward of land B 40 lakhs. Revaluation upward of land C is also 40 lakhs. Now the attribution will be 1:1. Okay, so suppose if it is not 40:40, in the மாதிரி ஒரு table போடுறது, always do the table, that will be easy. Here it is equal. Even if it is equal, you can do the table. Okay, total will be 80 lakhs. So the attribution formula will be, okay, total capital gain divided by total revaluation upward into this 40 lakhs. Suppose if it is 50-40, உங்களுக்கு answer easier. Please do the statement of attribution. Did I do a mistake? Sorry. 125 இருக்கு 127 இருக்கணும். Yeah, you asked me. Huh? I did a mistake of taking 21. இதில் செல் செலக்ட் பண்ணும்போது unless I come to the attribution. Unless I come to the attribution. This is very important for me. This is very important for me to understand. Unless I come to the attribution, I will not know whether this is short term or long term. Now, okay. Now, this is 14-15, 15-16. Both are long-term capital assets. Okay. So, the resulting gain. Okay. The surplus is attributed to long-term capital asset. Hence, the gross gain computed is a long-term capital gain. Is the long-term capital gain. The surplus attribute is attributed. Both these assets are long-term capital asset. This is also LTCA. This is also LTCA. Both these assets are long-term capital asset. So the entire. If it is one LTCA, one STCA, then in the attribution ratio, I will divide it and find what is the short-term capital gain, what is the long-term capital gain. Yeah, I'm coming to that point. Yeah, I'm coming to that point. Okay, first at this level I want you to understand. Now uh, Ananya was asking me, so இப்போ நான் இந்த லேண்டோட வேல்யூ இன்க்ரீஸ் பண்ணிரலாமா? Land B, can I pass an entry revaluation account debit to, I mean land B account debit to revaluation? No, revaluation is never a concept under income tax law. You cannot. So what will happen when I sell land B? When I subsequently sell land B, suppose I am selling it for 1 crore. Okay, I will reduce from the full value of consideration this 24 lakh 30,000 for example. I will reduce this amount from full value of consideration and then compute. I am not adding it to COA. I am reducing it from the full value of consideration when it is subsequently sold. Yeah, you will give in that. No, this is, it matters for here. It, whether this gain is long term or short term, I am not talking about the assets sold. அது அந்த சேல் சமயத்துல பார்த்துக்கலாம். This gain, whether it is long term or short.
You cannot have revaluation under income tax law. Income tax law will never. Why are you revaluing for bank purpose? For a partner purpose, then I'll again come with a lens. Exactly. Exactly. You're right. The question and the answer he has given is when there are four partners, first year one partner retires, we do this, another. Next year another partner retires, then also I will do the attributions and keep adding to the remaining asset. Okay, so that's why what is going to be important is this annual information report which the firms are going to file. They are going to show it this as a very important aspect. Okay, whenever there is retirement. Okay, remember it is also applicable in the case of admission. I will complete the answer first. Okay, the attributed quantum, okay, will be adjusted to the full value of consideration, will be adjusted to the full value of consideration when the asset is subsequently sold. Will be adjusted means reduced. Hmm? I mean, yeah, 20% tax, okay, but that is not the main point. Okay, my dear friends, this will be adjusted and attributed. I will take up small things and answer first before progressing. What if this is negative? What if this is negative? Huh? It will be zero. There is nothing called loss here. 45.4 cannot have loss. Okay, where the partner is paid less and he accepts to that, fine, fine. Okay, right? So you cannot have loss. Where it comes as negative, then it will be taken as zero. Okay, it will not have a loss. What if this is, huh? No, that can be carried forward. Yeah, that can be carried forward. You know, actually, though the word deemed is used there, that is only actually capital gains. இதுதான் deemed. டெக்னிக்கலா பாத்தீங்கன்னா இதுதானே டீம்டு. இங்க ஒண்ணு யாருக்கும் பெனிஃபிட். ஓகே, அதுதான் ரியலிஸ்டிக் கேபிட்டல் கெயின் இது. பட் லா யூசஸ் இட் அதர் வே. பட் கமிங் பேக், ஃப்ரெண்ட்ஸ், if there is a negative, it cannot be adjusted. Second thing, இது எந்த அசட்டுக்குன்னு attribute பண்ண முடியல. Suppose if this is unattributed, I haven't got the registered value as report at all. I have just like Ananya retiring. Okay, Ananya, hi jolly, கொடுத்து அனுப்பிச்சிடு அவளை. Okay. Okay. So I am unable to attribute. Income tax law will celebrate because there is nothing to increase. They are our gainers. They'll say fine. How can you? How did you? The whole thing is gone. So don't do that mistake. That's what they are coming and saying. If you are unable to attribute, nothing can be done. You are the loser. If this is due to self-acquired goodwill, because by goodwill, நம்ம 11th படிப்போம், by goodwill is one of the major thing. Fine. I will consider it only as a short-term capital asset. Because now only you are valuing goodwill. And once you make it, it becomes a purchased goodwill. When you are selling it, adjust. அப்படி உனக்கு goodwill வந்ததுன்னா, I will adjust it with the cost of acquisition. Okay. Before going into the next question, let me be summing up the discussion. Okay. 45.4. Okay. To whom it is taxable? Taxable only to the entity. It is not partner who is paying this. Okay. But one advantage is for the partner, cost of acquisition is that 50 lakhs, 40 lakhs, whatever he gets. Okay. So, where a specified entity, where a specified person receives during the year money or capital asset. Here, I am not taking stock in trade. Here, I am not taking stock in trade. Okay, or both from a specified entity in connection with reconstitution. We know what is reconstitution. Then any profit on gain is chargeable under capital gain, taxable. In which year it is taxable? In the year in which it is distributed. Okay, income will be taxable in the year in which the specified person receives, nothing but distributed. Nothing but distributed. How to compute? FMV plus monetary consideration minus amount standing in capital account. My dear friends, I have already given you, I have not written here what is the capital account balance, but I have given it in your notebook. Please remember that. Where the result is negative, Lasa, illa, I told you, if this is negative, no, the capital gain shall be zero. There cannot be capital loss. There cannot be capital loss. Just because your partner is receiving lesser, don't. Okay? There cannot be capital loss. Thanks, சொல்ல சொன்னாங்க. GST class நானா அதுதான். Okay? Right? What is balance in capital account? You will not include amount credited in revaluation and other things. Okay? Are 9B and 45.4 mutually exclusive? Will both be coming? Rendu varma? Will you tax under? Yes is the answer. Yes, they are there. Okay? Yes is the answer. The wordings of 45.4 reads, the provision of this section shall operate in addition to the provisions of 9B. Huh? They are mutually exclusive. One comes, does not come the mutually exclusive one. Okay, sorry for my English also. Okay, I thought one comes, the other does not come. Other than a mutually exclusive. Oh, it is not. Oh, I should have written no one. Okay, okay, okay. Okay. So, but I hope the class understands that the provision will operate irrespective of 9B, and the section 9B will be worked out independently. Okay. So 9B will have stock in trade, whereas 45.4 will have a different. Okay. To draw a parallel, we know buyback of shares actually is taxable in the hands of the company only, though the okay, that's just a parallel. What is the basis of classification? Okay, it will be a STCA if it is depreciable asset. Just now I saw patent, self-generated assets, okay, or any other short term if the land is just 1 year old, etc. Otherwise LTCG. What are all the cases it will be STCA is if the attribution is towards a depreciable asset, self-generated goodwill, or any other short-term capital asset. I'll work out and show. In any other case, long-term capital gain. what is the basis of attribution, where the amount is chargeable to income tax as specified, the specified entity shall attribute such amount to the remaining assets. To the remaining assets. How to attribute? Where the surplus relates to revaluation of capital asset and it is based on the registered valuer's report. If that is not there, attribution is lost. Remember that. Self-generated goodwill, the attribution will be surplus into total revaluation. That's what is this table which I told you. Okay, this table is total. This will be 48 into 80 lakhs. Into 40 lakhs divided by 80 lakhs into revaluation divided by total. Where the surplus does not relate to any revaluation, attribution is not possible. I told you, a partner retiring, you paid extra. It is not because of you got a registered valuation you applied, then nothing is part. Where the surplus relate to capital asset distribution to the specific attribution shall not be made. Okay. Huh? What's the amendment, please? Can revaluation be given effect to the asset? No. You cannot give revaluation. Okay. That is not at all acceptable. What is the only benefit you will get when those assets are subsequently transferred? I will reduce it. Otherwise, revaluation is not possible. So you will, 78 provisions. And the administrative provisions, you know how it is. That is, you need to file form along with your this saying that I have attributed everything. Okay, right. You will reduce it. Whatever has been attributed, you will reduce it. That's what he was also asking. Yeah. Any type of transfer. Transfer. If in question number 1, how will the answer explanation change in the following? The firm, apart from transfer of land, has another 2 lands, the details of which are 20 lakhs becomes 50 lakhs, 30 is revaluation upward, 40 lakhs becomes 50 lakhs, so 50, okay, the attribution will be, computation is the same, okay, this 8 lakhs has becomes this 50 lakhs, okay, okay, if I look at it, okay, up to this, even this computation is the same, but the attribution will be in the ratio of 3 is to 5. 3 is to 5. Okay. The attribution alone will, it is also a long-term capital asset only. But where the change takes place is only in the attribution. Please do it. Please do it. Give me a minute. I have someone waiting. I'll just come back. I start. Okay. Originally I thought I will do new questions, but then yesterday when I was looking into whatever I have done in the regular classroom, I was very satisfied with the question. That's why I just thought I will continue with the same question. Actually, these I thought goodwill on a regular classroom, I did not work it out as a solution. That's why I did it as solution. You live okay, but here the regular classroom question for both slum sales and this, I was satisfied with the question, so I am. But in the revision, when I do, I will not explain the concept again in revision, but I will do question and show it to you as a quick recollection of concept. But don't ask me to do the concept. The revision okay. So question number 2, the total surplus will not change, remains to be the same. Okay. The surplus will be 48,573 divided in the ratio of attribution will be on the basis of revaluation of land. Land 2 is revalued upward by 30 lakhs and land 3 by 50 lakhs. Hence, the surplus needs to be attributed in the ratio of 3:5. The attribution is not for the benefit of current year. Whenever these are sold, this can be reduced. This can be reduced. Okay, so that is what is case question number 2. Question number 3 also. Okay, continuing question number 1. How will your answer change if there is a change in the following factors? This is there is no attribution possible. The registered valuer, unless you get that, okay, unless you get that, valuation cannot be on the basis of in the land இன்னைக்கு வித்தா 1 crore போகும். You need to have a registered valuer's report to understand that. If that is not there, what happens is they will pay tax. The firm will pay tax for that 48 lakhs, but that 48 lakhs can never be attributed. Whenever you sell these things, also you will pay the full tax and not you will not have any reduction. So the question number 3, where the balance assets are not revalued or revaluation is not due to registered office, then the principle of attribution will not be effective. You will be taxing it completely. Only that portion. What is that portion? You will never know. You will not know it is 20. If you revalue entire assets. If you revalue just one asset, then you cannot attribute fully. If you are able to attribute fully to that, fine. Okay, you have land 1, land 2, land 3. Land 1 you revalued using a registered valuer. Land 2 and 3 you just like that set a value. There is no attribution possible for all the. Question number 4. This again will be interesting because here I am bringing in goodwill and all. Okay. Radha, Radhika and Rati are equal partners. The capital account balances are 15, 20 and 30. Radhika decides to retire from the firm and the other two decides to continue. Radhika was paid 1 crore, okay, for a capital account balance. So 9B operation is not going to be there unless the question henceforth says it is only monetary consideration. For the purpose of enabling cash flow, the firm sold land which was purchased in 1-2, purchase value 3 lakhs and it was sold for 1 crore. இதுவும் 9B கிடையாது. இது normal capital gain. This will be normal capital gain. Okay. Compute the capital gains of in the hands of the firm ignoring such charge. Compute the principle of attribution and its effect in the following cases. All cases are exclusive, mutually exclusive character. Okay, case A, B, C அப்படி வச்சுங்க. Okay, case A. The firm has two other lands purchased 5 years ago, which were revalued upward, so 30 lakhs and 50 lakhs. So whatever capital gain we are going to get is attributed in the ratio of 3:5 and everything is a LTCG. Case B. The firm had a land which was purchased 5 years before, which was revalued upward by 30 lakhs and depreciable asset revalued upward by 20 lakhs. Whatever we get as capital gain, whatever capital gain is the one time computation. Okay, and the capital gain short term or long term. how much is attributed. இது ரெண்டு தான் question மெயினா. So whatever we get will be distributed in the ratio of 3:2. This will be a long-term capital gain. This will be a short-term capital gain. The firm has a depreciable asset revalued upward by 20 lakhs and they valued self-generated goodwill. Both are STCG. Both are STCG. Okay. That's how we need to, shall we? Okay. There is no 9B here. It is normal computation of capital gains. In the 9B is operated only if it is given to the partner as capital asset or stock in trade. So there is no 9B here. It is normal computation. Work along with me, please. Work along with me. Wait for me to complete and then take down. Let's work together. The land was purchased for 3 lakhs in 2001 to base year itself. here equal partners. Equal. Yeah, they equal partners. Become a coffee. Scroll down. Which partner retires? Radhika decides to retire. So 20 lakhs. அவங்க குடிக்க மாட்டாங்க. அவங்களும் குடிக்க மாட்டாங்க. அவங்க வந்து இல்ல எனக்கு வேணாம். இல்ல வெயிட் பண்ணுங்க. At this point, we cannot determine whether it is long term or short term. We should wait. Up to this, there is no case A, case B requirement. Now only that requirement starts. The firm had two other land purchased 5 years before, which were revalued upward in the ratio of 30 is to 50. Case A. upward revaluation of land 1 is 30 lakhs of 30 lakhs, 50 lakhs. That is the amount of revaluation. The firm had two lands which were revalued upward as 30 lakhs and 50 lakhs. Correct? That is the value of revaluation. Revalued upward by no, revalued upward by 30 lakhs, 50 lakhs. So the attribution will be, yeah, classrooms. Appears on the other. So this is a long-term capital gain. Short term, wherever it is not apportionable, wherever it leads to self-generation, short term. In case B, the firm had a land which was purchased 5 years back, upward revaluation, and depreciable asset 20 lakh. So what we remember is this is LTCA, this is STCA. That 53 lakh 94,9064 is attributed in the ratio of 3 is to 2, and it is also divided as LTCG and STCG in the same 3 is to 2 ratio, because whatever is attributable to land is a long-term capital gain, and whatever is attributable to depreciable asset is a short-term capital gain. Clearly. 3 is to 2 தானே. Okay. The whole key point is, I mean, to just ensure that we are on the same page and clear. Okay. This revaluation cannot be given effect to in the books. Okay. You cannot, which means, because the question is, can I henceforth charge depreciation on this amount? No. Whatever is the opening WDV, etc. When you sell the asset, the sale consideration can be reduced. Okay, cannot be given effect to in the books. In other words, depreciation cannot be charged on such revaluation. Depreciation, you cannot charge depreciation on the revaluation part. This is the key factor. Okay, okay. The third is the depreciable asset is revalued upward by 20 lakhs and self-generated goodwill by 30 lakhs. Twenty, the same amount. 20, 30. Both are STCG. Both are STCG. Be it self-generated goodwill or upward revaluation of depreciable asset. Both are STCG. Okay. One advantage I will have now is this becomes a purchased goodwill. Because I am paying tax, this becomes purchased goodwill. Another depreciation claim under. Whenever I am selling it, normally self-generated goodwill, cost of acquisition is nil. But here, whenever I am selling the goodwill, I can reduce the full value of consideration to this amount. Okay, that is the only advantage I will have. If self-generated goodwill is going to be allowed, Ananya, every one of us will value absolutely in an unfair manner. You should never recognize that as a concept. ஏன்னா அதை டாக்ஸ் பண்ணிட்டேனே அந்த பார்ட்னருக்கு why did you pay 50 lakhs extra when his capital balance is only 46 lakhs you paid him 1 crore because you valued the self-generated goodwill to the extent of 1 crore or something and given him his share of it. That is why you are taking that self-generated goodwill here. Because I should not again tax it. If at all you are able to sell your self-generated goodwill. அது ஒரு பெரிய question mark இல்ல. Okay, right? So please be cautious. I'm not astrologer, but I see that there is a very big possibility of questions for both May and November. I see a possibility of question because so much things are there to understand. So much things are there to understand, both from the slum sales perspective, smaller thing but deeper. It is very deeper. Here it is larger, deeper. In terms, we brought a new section, we brought a lot of changes, etc. So both these things are important. I have never said that this is only one asset. Huh? I have never said depreciable asset is a block always. Books of accounts prakaram, they will have it asset wise. So they are able to do it. But for us, it is block only. Right, friends? And now progressing forward. So this is a very important, essential area to understand. Okay, we have seen the CBDT circular. Straight question from circular also possible, or interpreting the circular, the questions are also possible. Theory also possible. We have covered it extensively. This is more than sufficient. Okay, walking forward to a small amendment in TDS. Okay, actually the next two bigger amendments, which will be the focus of our tomorrow's class, will be one on trust. What are all the amendments in section 11? Because of this corpus fund, you should not use the corpus fund and claim it as 85% used, etc. And the other is 147. which I will take it up detailed tomorrow. I want to just start with some, we'll have 10 minutes, just a, just amendment in dividend. Previously, this was missing. Now, business trust distributing to, SPV distributing dividend to business trust is also coming under TDS. And this is the new section, which is a questionable area. Okay. It is a grand announcement in the budget, but boils down to zero. Super senior citizen need not file their return of income, but with lot of conditionalities. ஒரு பேங்க் தான் இருக்கணும், அதுல தான் இன்ட்ரெஸ்ட் வரணும். Okay. Finance Act 21 has given certain exemption to super senior citizens from filing of returns. This section is to fulfill maybe specified bank is a banking company of a scheduled bank. Specified senior citizen is age of 75 years or more, having only pension income and interest income from the same bank. He should not have any other income. This is the key point. He should furnish a declaration. I only have pension income, and that is also credited in the bank account which I am having in your branch. And all my deposits are here only. I don't have any other. In that case, the difficulty is now for the banker. He need to calculate his tax. Pension, okay. Standard deduction kudu. Sarada investment pannirkela. Do you have mediclaim? Okay. Role of the bank. The bank shall compute the total income of the specified senior citizen. So, already we have senior citizen, super senior citizen, now specified senior citizen, who is 75 plus. Instead of 60, the super senior, this category is now applicable only for rates of taxes. Why I am telling is, previously 80D, 80DD, 80DDB, 80 TTB were all. Now everything is for senior super. This should be clubbed at the first level. Okay. Anyhow, this is not a class for opinions. Anyhow, the bank shall compute the total income after providing for Chapter 6A deduction and after providing for rebate. Literally, you are making the banker job very difficult. The tax computed on shall be deducted by the bank. Okay, compute the tax, deduct it, so that that person need not file the return because you have deducted tax source. Suppose that person has one other deposit in some other bank, he cannot avail it. Even though he gives a declaration of that bank's interest, he cannot avail it. Mr. Sharma, aged 77 years, get 52,000 from pension from the state government. The same is credited to his State Bank of India Lucknow branch. In addition, he gets 8% fixed deposit interest on 20 lakhs with the said bank. Out of the deposit of 20 lakhs, 2 lakh represent 5-year term deposit, which is made on, this is for 80C. Interest on savings bank credited to SBI account 9,500. He will get 80 TTB. He is a senior citizen. From the following above facts, compute the total income and tax liability, assuming he has not opted for 115BAC. What would be the amount tax deductible by source by SBI, assuming that the same is a specified bank? Is Mr. Sharma required to file the return of income? Case 3, is Mr. Sharma required to file return of income for assessment if the fixed deposit of 20 lakhs is with Canara Bank instead of SBI? Obviously, even though he gives it to SBI, a declaration, it cannot change the answer. Okay, without wasting time, I'll just discuss the answer directly. But for a minute, here is the answer. I'll cut and paste it. Don't worry. Okay. Mention you don't forget to provide standard deduction. The institute question, our study material question only. Don't forget to provide standard deduction. Interest on FD 160. Remember 80 TTB, this will also qualify, this will also qualify. 80 TTA the only savings bank. For 80 TTB, it can even be fixed deposit, time deposit. Okay, right? So 80 TTB is 50,000. 80C is 150 because he has deposited in this year. So total income 543, not eligible for rebate. He is 75 plus. So up to 3 lakhs is his basic exemption. His basic exemption is up to rupees 3 lakhs. Okay. So 43,500 into 20% plus 10,000. 43,500 into 20% plus 10,000, and this is his tax. Let's answer the other part later. First, copy down this or take down this. May I? Let us know when will you upload the amendment videos for us to watch later, just in case we miss the session. The time it takes to upload and processing is little higher. That meanwhile I have to prepare a lot. Today I will try to upload both the videos, yesterday and today's video. Yesterday sure upload பண்ணிடுறேன். Today's video I will also try to upload it to today so that but ஒழுங்கா அட்டெண்ட் பண்றா ஸ்ரவன் படவா 4 நாள் தானே கேக்குறேன். Yes, yes, I definitely tell you that amendment material will be shared. You don't have to have that doubt at all. It will be shared. If I share it now, you will also underline like me. I want you to write. So that's why I am asking you to, once you write, it will be more useful. That's why I'm not sharing it upfront. Amendment material will be shared. Excel will be shared. Okay, now going to the questioning part. From the above facts, compute the total income, and we have got what would be the amount of tax deductible by SBI. according to 194p, SBI being a specified bank, scheduled bank, and Mr. Sharma not having any other income other than the pension from the same bank and this deposit, the bank on obtaining a declaration from Sharma shall deduct the above sum. That is, this will be deducted as tax by the bank. This will be deducted as tax by the bank. Where bank has deducted the tax, Sharma is not liable to file his return of income. Bank will take care of it in their AIR. Where interest is received in Canara Bank and pension is received in SBI, then the provision of 194 cannot be availed. It should be in the same bank. So the applicability of this provision itself is a big question mark. But a questionable area because of its amendment. Because of its amendment. TDS will have the two marks for questions. One of the 2 marks can be this. One of the 2 marks can be this. Okay. Friends, I wind up here the class today. Okay. Tomorrow's class will commence with TDS, TCS amendment. Okay. TDS and TCS amendment, followed by the trust, followed by that 147. This will be completed tomorrow, so that the fourth day will be small things which we can complete. Meet you tomorrow morning, 6 o'clock, either live or physical. All the best.